A very good morning, folks, and welcome to a brand new episode of Finmet Mondays. This is the second week we've seen gold correct considerably. Gold is stationed around 4,400, 4,300 levels, and it's been moving in this range since the last couple of weeks. Any specific developments that you think our viewers would be interested to know about the movement since the last 2 weeks or in the last 1 week? What is your take on the outlook of gold currently?
There's two things that I specifically want to look at. One is, why did gold sell off so much? And then what was the reason that we saw this rebound from 4,100 to around the 4,500 level currently? So the first thing is, the factors that are moving it down, I think clearly driven by the uncertainty around the war. What has happened is that as this war has stretched on, we have seen people having a risk-off strategy. The equity markets have tanked, the crypto markets have tanked, and I think therefore also gold and silver has come off as people have taken profits on their positions and also are moving towards liquidity. So you can see that very well reflected in the ETF holdings. The gold ETF holdings in New York have declined by 50 tons in the last month or so, actually last 2 weeks or so. So that's almost 5% of the total holdings were sold off. So we're back at levels where we were at in January 1st. So that's a huge sell-off that's happened. But also there's been news that one of the Middle Eastern central banks has been selling gold a considerable amount, between 50 to 60 tons, to try and shore up its resources ahead of the further escalation in the war. So that has put further selling pressure. So that's why we saw gold suddenly rush downwards. And then what we saw when it reached about 4,100, 450 earlier in the week was there was a good amount of physical demand. Physical demand has been very quiet for the last few months. And then we saw a sudden spike in physical demand from all over, from Middle East, from India, and also from the Far East. And that physical demand buoyed the gold price. And that's why you saw the $200 or $300 move up to where it is right now. I think a culmination of those factors is what people need to keep in mind.
Going by your take on the geopolitics that's currently happening, what do you think the possible trajectory of gold looks like? Not in terms of a definite direction, but more in terms of this is what it seems like to be where gold is going to be around in terms of range.
I think there's two paths that could take. One is that if the war carries on and you have further liquidation of equity positions and bond positions, you will see also gold positions coming off. So you'll see gold moving back towards the 4,200. So over the beginning of the week, you may see a slight decline. If, however, there is any news that shows that we're coming to an end, then that will be positive for gold, and that's going to move gold upwards.
And according to you, is reclaiming the 5,000 level possible as part of this upward move? Let's say when the geopolitical fears ebb, is coming back to that 5,000 level a possibility?
It's a possibility, but a lot of things have to come into place because remember what is underestimated or not estimated is the impact, the tail impact. Even if the war would stop next week, what would be the impact on oil, on inflation, on growth projections? There's a lot of other uncertainty, and I think that's going to really drive the gold prices going forward.
Understood. Understood. Well, thanks a lot, Sunil. See how the markets play out as well next week. Till then, thank you so much, Sunil, and goodbye.